Pinterest stock is popping over 20% in the after hours. Is this a case of a stock that did just enough to meet lowered expectations? Or is Pinterest on its way to being a great stock? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Pinterest, ticker symbol PINS. Year to date, this one, like a lot of stocks, just getting hammered, down 45%. Stretch it out to a year, even worse story, down 65%. That does not include the gain we're seeing in the after hours, between about 18 and 20%. The stock went from about a $20 stock during the regular session all the way up to about $24 per share. We'll talk about that from a technical perspective here in a moment, but I want to jump into these Q2 earnings, which came in at about $665.9 million. That was 8.6% growth year over year. Now, they did miss expectations on that revenue side and that earnings side, but again, the stock is popping, I think in part because maybe some investors were expecting a much larger miss, but we also got Q3 guidance as well. The company's saying that revenue will grow in the mid-single digits on a year-over-year basis, and the article says here that consensus estimate was 8.15%. I think that's including some kind of constant currency, because when I come over to the company's estimates page over on Seeking Alpha, the estimates was actually much closer to about 12%. Again, this company guiding to mid-single digits, which in a lot of ways is actually cut in half the growth rate that was expected by Wall Street at 12%. This company probably going to be 5, 6, 7% grower for the upcoming quarter. But that was, again, just enough for Wall Street to send this stock high. Now, some of the other things that we're watching inside the online advertising space, we're comparing Pinterest valuation, which in the past was astronomical. But all of these stocks, we've got Pinterest on here, we've got Snapchat, we've got Google, we've got Meta, and we have Twitter. They're all converging at the same spot. Pinterest now trading at 4.7 times sales. Snapchat finally bringing up the rear, which is where it should have been all along, now trading at a discount to the peers at 3.5 times sales. Google finally trading at a premium, because I don't think I've ever done a show where I've compared the valuation where Google trades at a premium. It now trades at 5.5 times sales. And Meta trading at 3.6 times sales. That's certainly fallen off the map. If you factor in their price to sales is almost equal to Snap, probably would make Meta the buy. And now finally you have Twitter, which is kind of its own special situation. Obviously with the Elon Musk bid underneath of that, they trade at 6.6 times sales, but we know if that bid was not in there, they'd probably be trading to a sales ratio closer to Meta and Snap. So Pinterest valuation, it was over 20, 30 times sales at one point. So was Snap. We see what happens when your growth starts to shrivel up. All of a sudden the cream rises to the top, and that's exactly what's happened over at Google. Now, Pinterest at 4.7 times sales, probably still slightly overvalued, but if you believe in this company's future, that could be a good buying opportunity. Now, Pinterest jumped today 18% as the revenues come in as expected, but they also got the backing of Elliott Management, as this is one of the company's largest institutional shareholders. It appears that they are giving kind of the green light to the new CEO over at Pinterest to have a little bit of a runway as we walk through those financials. It looks like this company needs it. Now, the changeover in that CEO role, Pinterest was being run by a co-founder slash CEO. That co-founder has stepped on to be the executive chairman, and Pinterest brought in a Google veteran to run the social media site over at Pinterest. Now, the changeover does indicate some kind of commerce shift, and we did see some movement on this. Pinterest closed its acquisition on the Yes. It was an artificial intelligence powered shopping platform. I'll show you that they don't disclose the financials here, but look, this is the beauty of understanding the financials and being able to say, well, I can actually figure it out myself by going through this earnings report. I'll show you that here in a second. And then finally, Pinterest also struck a deal with a video content maker called Tastemade, where they're going to make over 50 new TV shows. I've got to imagine these are very lightly edited or maybe kind of shorter form TV shows. They'll also do live videos and events. So clearly Pinterest is moving in the direction where they're going to focus more on maybe commerce on the site, but also maybe some TV and some video as well. Probably a good transition if you ask me. Now, when you look at the company's monthly active active users, they've been on decline more recently. Now, it's started to flatten out from a total user perspective, but some things that we need to understand about Pinterest is the fact that they make the bulk of their revenue here in the United States and Canada, as the average revenue per user is $5.82. Last year, it was just $4.87. So nice growth there. Out in Europe, their second largest market, we've got 86 cents per user. That compares really favorably to last year where you had 72 cents. Now, the largest market for Pinterest is actually rest of world, essentially everything outside of United States, Canada, and Europe. That is its largest from a user base, but unfortunately, they earn just 10 cents per active user there. Last year, on a year-over-year basis, it looks really nice. You went from 6 cents all the way up to 10 cents, but you see over the last 3 quarters, you went from 11 cents in a Q4 down to 8 cents up to 10. I'm wondering how much room they have left on this, considering Europe is just 86 cents. Certainly for Pinterest, if they're able to grow this again, I don't expect 80% growth year over year on that rest of the world ARPU, but if they're able to grow it just fractionally, they have enough users there where it can move the needle. Now let's move over to the financials over at Pinterest. This is very important. Now, from a balance sheet perspective, Pinterest leads off with their balance sheet, and I certainly would as well. You come down to total liabilities over at the company, and you have very few liabilities, just $557 million in total liabilities. When you have $2.6 billion worth of cash, that's about as good as it gets, and that's why we continue to be interested in Pinterest, and the fact that this balance sheet does give them some leeway to make some acquisitions, to try some different things, and if these things work, there's probably incredible upside at this stock, considering the valuation is now back into a range. I'm not saying this stock is cheap, but it's a heck of a lot cheaper than it was. Now, moving over to the profit and loss statement, otherwise known as the statement of operations, our revenue came in at $665, again, up just fractionally year over year, 8.6% to be exact. You went from 613 up to this $665.9 million. Now, unfortunately, over at Pinterest, that's where my kind of positive remarks about the company start to end, because notice our selling and marketing expenses year over year went from 164 to 212. That's a jump of nearly $50 million. That equals essentially your revenue jump. So I would expect if a company spends $50 more million on sales and marketing, they get at least that out of revenue. And in fact, it's actually a disappointment. Now, if some of those advertisers continue to rebill, or Pinterest is able to recognize maybe some of those contracts over a longer period of time, certainly could pay off. But you also follow that up with research and development expenses in the most recent quarter, going from 181.7 all the way up to $223 million. You also had general and administrative went from 68 up to close to $90 million. Our total costs and expenses over at Pinterest went from 542 all the way up to $700 million. So you guessed it, our revenue of 665.9 minus 700 million spits us out to an operating loss over at Pinterest. Last year, quite frankly, we were a little more excited considering this company printed about $71 million to that operating side. That has shriveled into an operating loss over at this company, but clearly investors not super concerned, because another way to look at this over at Pinterest, another view you could look at this is through operating cash flows. You certainly could bring up valuations of all these companies based on their cash flows as well. And over at Pinterest, it paints a wonderful story. So you pull down a 6-month net income figure over at Pinterest of negative $48 million. You were nearly positive $48 million a year ago. So it's really turned in the wrong direction. And what's interesting enough is the executives gave themselves even more stock-based compensation than they did last year. 179 last year, all the way up to 190. Obviously, getting a new CEO probably changed some of the executive compensation structure. Some of his pay package might be accelerated. I'm not 100% sure that's what's involved here, but I would say going forward the next 6 to 12 months, I wouldn't expect this share-based compensation to go anywhere but up. But the good thing about cash flows is that does not count against your cash. You get to add that back in, and you come down here to net cash provided by operating activities positive $333 million. Last year it was better at 375, but this paints a story when we talked about how wonderful the balance sheet was over at this company. The fact that they're continuing to finance the operations over at this company by paying the vast majority of the salaries through a stock-based compensation certainly conserves cash over at Pinterest. Now, what I also noticed was interesting year over year. Here's your purchase of property and equipment and intangible assets went from 3.4 all the way up to nearly $20 million. So they've accelerated some spending there. Here's your acquisition of business, net of cash acquired. This is likely a big portion of this closed acquisition of the Yes, which was again an artificial intelligence powered shopping platform. You had $86 million worth of spend in the most recent quarter there. So that gives you an idea. It's not an exact idea how much they paid for these websites, but it gives you somewhat of an idea. Now, they didn't do a whole lot down here, so they've added cash to the balance sheet over the last year. Considering you had $330 million worth of positive cash flow, spent about 75 on investing and about 34 on financing activities. That's plenty of cash flow flowing into the bottom line over at Pinterest. So from a cash flow perspective, very healthy company. From a balance sheet perspective, very healthy company. If they can wade through this environment where monthly active users are likely to wane a little bit, I would expect average revenue per user to start to flatten out just a little bit over at Pinterest. That's certainly your upside with Pinterest if they can continue to accelerate this ARPU, especially in the United States and Europe regions, and certainly rest of the world as well, would be beneficial for Pinterest in the long run. Now, what's also benefiting Pinterest in the after hours, this thing's popped off an area where we're down here. We're popped up here to about $24 per share, and it is a natural area where Pinterest would find some support and some resistance. Down here, the stock found a bottom at about the $18, $19, $20 range, but there is an area where the stock is starting to stall out up here at about $24 per share. We'd expect some resistance here. More than likely, Pinterest, from a valuation perspective, from a forward guidance perspective, none of this looks that great over at Pinterest. I would expect this stock to make some kind of pullback in the coming days and weeks ahead, go from about 24 again back and retest these areas down here at about $20 per share. If you like Pinterest, and I think from the longer term perspective, you got to buy into the CEO, you got to buy into the new vision. They're going to have to do acquisitions, which I don't mind. They're going to have to pivot the business just to a certain degree, introduce new features to the site, introduce new ad formats. If you like this area back down here south of 20, which I think almost assuredly will retest on some kind of pullback, that will be your opportunity. Me personally, if I were to buy it here at 20, I would sell the run-ups on these ones. There's not enough information in these financials, especially since we're losing money, to make me want to buy and hold this for any length of time. If I can buy it down here at 20 or 19 and I can sell it up here north of $22, $23, $24 on some kind of rebound or swing trade, I probably would take the money and run and pour my money into the market leaders, which from a valuation perspective is starting to make a lot of sense. Google, the by far and away winner out of this group, is trading at 5.5 times sales. So you have to start asking yourself, could Pinterest really accelerate from 4.75 times sales up and above Google again anytime soon, considering the earnings estimates are likely to be brought in? This stock expected to be a mid-teens grower for the foreseeable future. My guess is this will all be revised down in the coming quarter to probably a single-digit grower, essentially equal with Google. I don't see a reason to pay a premium for Pinterest shares. And again, unless it's some kind of shorter term trade or you very much believe in the vision and the direction that Pinterest is heading. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.